What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And we're going to be breaking down our futures contract. It's been a couple days since I last left you off with a video. Some days you feel it, some days you don't. I just really wasn't feeling like making any videos. There wasn't a whole lot to review over the last several days. I've done well in the market. However, whenever something like this happens with a gap of this magnitude and we come back into balance, I try to stay out of the market. So today I did not trade anything, but I do think we should review the market. We should review our 30-minute time frame and the larger picture. Kind of see where we're at with those in the larger picture, and then just kind of discuss what happened today, as well as mark some of our destinations. But today was a wild and wacky ride for both sides, the bulls, the bears, all the way around. Just an absolute chop fest. Just did not, it's this type of price action, man. It's just very tough to read. And if you're somebody that can capitalize on this, kudos to you. But if you're someone that's saying like you caught the top and you got out the bullshit, you didn't do anything. Same thing as saying you caught the bottom, you didn't catch shit. You didn't do anything. You didn't catch anything but a falling knife and got lucky. But it was a very interesting day with how we gapped down with a pretty freaking large gap down after yesterday's really big sell-off. You remember we had came out of an inside day to the upside, went trend up, and then continued to push up higher the following day on Monday, after closing out pretty strong on Friday, pushed into new highs on Monday, and then rolled over pretty aggressively, and then closed back into Friday's range. Now, coming into today, I really wasn't expecting a gap down on CPI, but nonetheless wasn't expecting a massive move in range that we got today, but we did anyway. But had we opened up, I was looking more or less around the 50 level. Would have been areas that I would have been interested in playing in, but because we gapped so low into areas of interest on the demand side, I really wasn't looking for anything. I didn't know what this market wanted to do, so we just let it play out and do what it did. So we gapped down into a gap fill because we had this gap up here, ran up, and then we gapped down, which caused this gap to fill. So pretty interesting there. I do find it interesting that after getting a one-time framing down, getting that 12 wide point of control back from the 6th, we bounced, pushed up, and then pushed it back into where that gap initially started. Okay, which was right there at that 49.88 level. And honestly, was not a bad short opportunity there, okay? Because we did push up, and you really weren't expecting the market to go trend on a gap down and value completely lower. So it was a good short opportunity right there at 88. And then definitely could have gotten a couple points, especially if you were just looking for this thing to rotate back into where point of control was at the time, and then even towards the low of days. Now, you definitely weren't looking for this move to continue to the downside quite like it did, as it did get some extension, tried to go trend down, failed as we had an aggressive, sharp bounce in M period late in the day, only to close back inside of value area and just below the open. So choppy session, but we did wipe out all these destinations on the downside. The only thing that does not go away is the 12 wide point of control up here from the 9th. That is a naked point of control, so meaning we have to touch that point of control in order for it to go away. Single prints, they get filled. Like I said, the gap gets filled. So all these destinations go away on the downside. We only leave one more destination to the downside, 49.29, which is what we're going to use as our balance low, and what we'll see what holds here. Now, something I do want to point out is with the location that we're in. Now, we wiped out all these support areas, right, by gapping lower, okay? Interesting how what I was expecting to have a little bit of support in kind of consolidated, ended up rejecting just out of that area and pushing lower, only to find some support down here. So moving forward, just initially, we're going to say that this is going to be some type of resistance. Going to be very careful longing in this area. Also, I have my screen kind of funky right now, so didn't mean for that to be pink. Get that adjusted. Sorry. So be looking for some type of resistance basically between 80 and 88 or 80 and 90. I think if we push up there, we might find a little bit of trouble in that area. But if we do get above it, then you know where your target is. And that is going to be the 12Y point of control up here at 5,013. If you get above, say 90, you get above 90, you will go and test 5013. But the downside, what we're going to be looking for, and since we're going to be calling this 49.29 level our balance low on the daily, and we'll look at that here in just a second, is we're going to be looking for some type of support here. Why are we looking for some type of support? Well, once we pushed out of it here, right, that was basically where we spiked up late in the close from Thursday on the 1st of this month, held in that range after we gapped, pulled back, held that area, 49.29, ended up going double, triple distribution on that day of the 2nd. So between 49.50 and 49.29, we kind of expect buyers to be in that area, because what did we do here when we pulled back? We bounced. And then on this day when we had that Y point of control, we never even got close to getting back into what was that lower distribution from that day. Even though the single prints did get filled and pulled back, I do like to look at distributions from previous time frame or previous days, and just kind of like to see how we react whenever we get there a second time. Third time's the charm, usually pushes through, but it's 2 times now we've pushed down into this level between 50 and 29. We'll see if it holds. If it does, then we should see a rotation back up here to 90. If we get above 90, then 50, 13, 12Y point of control, and then you look to test these levels up higher, but not looking for this gap to get filled right away anytime soon, because this gap does not get filled until 50.33, and then today we closed down here at 49.72. So still a pretty large gap on the upside there. So hopefully you're following along here, and hopefully this makes sense. What we're looking for is balance. Since we are in a balance, we're looking for a hold of balance low. Okay, because this between 37 and 29, rather. So if we were to reduce this, move this over here, between here essentially is what we're going to be looking for. Okay, we're going to be looking for support in this area, or rather we're looking for buyers to step in here. If not, then we're going to go trade at these lower destinations on the downside, which include the afternoon pullback low at 48.99 if we do break out a balance to the downside on the daily time frame, which would also be very, very bad, because it would also result in an outside week down. Once again, once we get to the larger time frames, this will all make sense, but it all takes baby steps in order for this to get going one way or the other. So far, the sellers did the first baby step, which is put the daily back into a balance by taking out a previous time frame's low. The second step for sellers is to take out the balance low, 49.29, which is what we're going to call it. Balance low, 49.29. If we take that out, then the daily goes one time framing down, and then you start to target 48.99, 48.74, and then all of these lows and poor structure down here at 48.59.75, but really not looking for that. Let's see if I want to see real quick where the 20-day moving average is located. Let's go this. Let's go here. Let's put in 20. I just want to see where it's at on the chart, not necessarily because we'll look at it where it's at on the daily. But I want to see where it's at. Oh, look at that. Look at that. So the 20-day moving average SMA is right around our balance low. Coincidence? So I think I said in last week's video as well, if at any point in time we did pull back, we'd go and test the 20-day moving average at some point. And I did say we'd fill this gap here. Well, we're doing both right now. So if we hold the 20-day moving average and what is going to be our daily balance low down here at 49.29, I do think we will rotate up, get above 5,000 again, and trade at 50.13. What we do in this area, I really don't know. Like I said, the gap gets filled up here. So it'll be interesting to see how we react, but I'm really not looking for this market to just kind of rip down just due to the CPI and the market not really liking it. I've been thinking that on this push, and I know I'm rambling a lot, and this is more or less for me, my thought process on how I'm thinking about the market currently is on these pushes up, right? On these pushes up, let me see if I can get this out a little bit further. Let's just look at the bigger picture here. Okay, let's get rid of everything. On these pushes up, okay? Let's just say you are somebody that swing trades, and you are somebody that has a good amount of capital, right? And you want to buy this market on dips or on pullbacks, okay? Because you do think that this market can continue to push higher. Well, guess what? We had accumulation here, okay? We had accumulation here, got sold here. Pushed the market back down below the 20, had accumulation here. Guess what? Got sold up here, right? We had a little bit of a pullback, large right after the run up here, had a little bit of a pullback, consolidation, okay? So meaning since we're at all-time highs right up here, right? We're at all-time highs. You're taking off some profits, right? You accumulated a bunch here, a bunch of shares, a bunch of contracts here. You're distributing those right around the highs. The market pulls back. You accumulate some more. Average price goes up, and then you start to hand out, you start to give the market a little bit of supply to test, are buyers responsive here? If buyers are strong and responsive, the market will continue to push up. Guess what? The market pushed up. You begin to distribute a few more contracts and shares, see how the market reacts to you getting rid of those shares or that. All right, so you're getting out some more here near the highs. Market pulls back, responsive buying from the short-term buyers. You, once again, begin to get out of a little bit more here near the all-time highs. Not as strong of responsive buyers. Market pulls in. Guess what? We accumulate more near the 20-day moving average. Boom, we push up. You get rid of some shares. Market really doesn't have enough demand. We pull back a little bit, but still have strong enough responsive buying in that area at 49.50, right? Still have responsive buyers there in this range here. After you distribute some more of your shares, you still have plenty in the boat from here and here. I'm just thinking, if you were somebody swing trading, all right, and you have deep pockets, this is what I would do if I had deep pockets. I'd buy here. I'd buy here. Distribute, distribute, distribute. Buy, distribute. Okay, responsive buyers, we're not near the 20-day moving average. Distribute, right? We had Y point of control here. We continue to push up, distribute. Market didn't have enough demand. We pull back. Guess what? CPI data we didn't like. We take out a daily low. We get below a daily low. We get out of all of our contracts near the highs, right? All that we bought down here at 4,700, right? All that we bought down here at 4,700. Let's just call it 4,760. Everything that we bought around 4,760, and we've distributed along the way, taking profits along the way, which is what we all should be doing whenever we're in a good trade like that. And we've made 289 points on let's just say for shits and gigs, you got deep pockets. You bought 100 lot, right? You're swing trading it. You've taken some off along the way. You have a quarter of your position left. You get all out of your positions, and guess what? Guess what you're going to do here? We're going to reaccumulate shares near the 20-day moving average, and guess what? If we hold near our balance low and our daily low, what should we do? If we have responsive buying in this market, and we see buyers hold here around the 49.50 to 49.29 level, right? Within that 25-point range. And we have our stop below 29. If the market is strong and responsive buyers step in, what are we going to do? Well, we're going to come back up here near the highs. And guess what I'm going to do? I'm going to redistribute my shares here. We're going to stair step up even higher. I'm going to redistribute some more shares here. We'll have a pullback. I'll buy again near the 20-day moving average, and so on and so forth. That's what I would be doing. And that's kind of what I've been thinking this market's been doing all along. That I think that's why we've seen wide points and controls and poor tempo near each high, is because I think smart money that did buy on pullbacks, that accumulated on these lower distributions, because we are in a bull market and they have deep pockets and they can take heftier losses than some of us, day traders. I think that's what was happening right up here. That's why we had the wide point of control here. We were feeding on the way up, got out, boom, came down. And, I'm not saying just one person. I'm saying that's multiple people that could be doing that exact same strategy. And that could cause the emotional move that we had today, along with any short-term traders that did buy near the highs yesterday or did buy down here because they thought it was a good risk-reward long, right? And then obviously when we opened up lower, or even looked like we might be opening up lower and we got below this day's low, they were out, which caused more of a move down, which caused the large gap. Okay. And then just emotional trading, right? When we pushed up, guess what? Anybody that was trapped up here and did not get out, guess what? They got out here. So that's just how I think in a nutshell. I know that was a long explanation, but that's kind of what I'm looking for tomorrow, is to see how we react down here. Are there responsive buyers? If there are responsive buyers, then we should, let's just say for shits and gigs, open above 49.50. If we open above 49.50, we will get above today's high at 49.90. Now we are in a rather large balance, okay, because we're going to be using 29 down here as our low, and then we're going to be using 66 as our high. So we got a pretty large balance here. This is a rough estimate. It's not going to be perfect. 29. We got a 137 point range that we can play in, okay? And of that 129 point range, we have a 45 or roughly a 50 point gap, okay, of that 100 point range to fill. So looking for buyers to step in down here, and then we will, obviously shorter term traders will step in here to sell. If there isn't big time sellers, market will push through that. And guess what? We'll come up and trade at that wide point of control that I was talking about at 50.13. And then, like I just said, where will I be looking to distribute any of the shares that I just got here, or any of the contracts I just gathered here? If we hold here, right? Where would I distribute? Well, take some off at 50.13. If I take some off there and we continue to push up, where's the next spot? Well, I'm going to take some off 50.33. And then where am I going to take some off next is near the highs, and then at new highs if and whenever we get to that point. Okay. Hopefully that makes sense. We're just, all we have today, not a whole lot, just today's high, today's low. And then we're going to look at the bigger picture. Hopefully, those of you that are sticking around, I do appreciate it. Hopefully you are sticking around. But this is how we're looking at things right now. We'll look at the bigger picture here, and then kind of update our daily balance. And then obviously if we take out our daily balance at 49.29, we will have an outside week scenario down, and I'll show you guys what that looks like as well. A low day 36.50. We'll update that to low day from today, which is the 13th. 24. Boom. All right. So there you have it. I'm going to keep that 20-day moving average on my chart. And now we're going to go ahead and look at the larger time frame. We'll start with the monthly. Break it down from the top. Monthly. Still healthy, okay? Monthly still very healthy. Been one time framing up, okay? after we broke out of this balance 1, 2, 3 months in a row. Now, as healthy as it is, we have had really good extension above previous month's highs. Now, in my personal opinion, if you are a long-term buyer, and not necessarily a long-term buyer, but somebody who swing trades, you definitely don't want to see this market get back below 49.50 here and stay below 49.50. All right. You do not want to see the market get below 49.50 and stay below 49.50. If you hold below 49.50, then you're likely coming back down further, maybe testing 4900 level. Okay, so 4900, 49 or 4850 would be the next levels on the downside from a monthly standpoint, in my opinion. But still very, very healthy, just not looking strong currently. But we still have half a month left. This market can turn around and most likely will because of how strong the monthly is. But we are one time framing up 3 months in a row. All right, let's look at the weekly. This is where things begin to get interesting, okay? This is our weekly. Now keep in mind, 2 weeks ago, we had an outside week down scenario that turned into an outside week up scenario, okay? Which put our weekly back into a balance. And then last week, that outside week up scenario played out pretty well as we broke through that balance and got a pretty good push up above 5,000. All right, now this week we have another chance and another opportunity as at an outside week down. As we took out last week's low, which was 37.75, we took out that low by roughly 1.25 points. Okay, so we didn't take it out by much. All right, so if we hold above today's low, all right, saying that we do not take out today's low, which is currently our weekly low, if we do not take out that low, I will still say that the weekly's one time frame and up, we will not be in balance. But if we do, then we'll come back into a balance of at least 3 weeks. But obviously the balance would still be forming. But we would at least be encompassing these 3 weeks right here, unless we continue to push down further. But we do have an outside week scenario playing out at hand. Buyers do not want to get below 37.75 and close below that, okay? That is our weekly balance, our weekly low from the previous week, and that needs to hold, must hold, if the buyers want to remain in control on the weekly. Excuse me. Starting to lose my voice here. So hopefully that makes sense. If not, outside week scenario plays out, then you're targeting 48.68 on the downside. Now let's look at the daily. As we've come back into a balance on our daily time frame, come back into a balance with a little bit of, I forget why. Because this was a target of mine. That's right. Ha! Oh, look at that. I forgot I put a target box up here from whenever we were getting ready to break out of this. I put a target box up here where I was looking for around the 50.50 to 50.60 level. And it turned out to be more than just a target. Funny how that played out. Not that I was like calling that. I just was looking for us to get up there at some point. Didn't think it'd reject like it did. But pretty ugly hammer here where we turned rejected down pretty good here with the gap down. But you could see how we are retesting what was once our previous daily balance, where we had a lot of consolidation in here, a lot of price discovery around the 4,900 level. And then we have held above that for quite some time. And now we've had a bit of a pullback. So the weekly still healthy-ish. The monthly still healthy. The daily's had a little bit of a pullback, which is not bad for the market. However, if we do take out that balance low here at 49.29, which I'm going to update here in just a second, then we'll be one time framing down on the daily, and then we would have an outside week down scenario at play. The 20-day moving average, 49.32. Look at how we got near it. Boom. rejected aggressively. Okay. However, if we break out of balance to the downside, okay, if we break out of balance to the downside, then you'll go and test our 50-day moving average, which is down at 48.22. Balance high is now 50, 66.50 is our daily balance high. And our daily balance low is 49.29. Daily balance low. So we are in a rather large balance, but we are in a 1, 2, 3, 4, 5, 6, 7, 8-day balance. Okay. Because we are encompassing these last few days. Pretty wacky market. We gapped down into a gap. So now I get to move this gap from there. And it does not get filled until there. So of all the gaps that we have, this is one of the larger ones that we've had. We have this gap way down here if things were to get extremely aggressive. And that would be a target on the downside if we were to break both the 20 and the 50-day moving average. However, I'm not looking for that. The last time we tested the 50-day moving average was back on November 9th, and then November 10th from last year was the last time we seen the 50-day moving average. So far, we have only gotten below the 20-day moving average a handful of times. So once again, this is a must hold for the buyers. I think, in my opinion, I think buyers should definitely hold here. 49.29, hold the 20-day moving average. And once again, balance rules are in effect. So get near balance low tomorrow, hold it, and then you would reverse and visit the other side. Stretch a balance low, which would mean taking out 49.29 by only a couple ticks to a point, and then coming back inside that balance, and then you go and test the other side, or you do the third rule, which is push 2 through and away from a balance area. Now, I know this was a much longer video, but hopefully you guys get to understand like my thinking process, and hell, it even helps me understand what I'm thinking. So hopefully you guys enjoyed this video. I'll catch you guys in the next one. Thanks for stopping by. See ya.